Hello and welcome to the Chart of the Week video with me, David Madden. Today's date is Wednesday, the 8th of August 2018, and the time has just gone at 10:35 British Summer Time. This week's Chart of the Week is the S&P 500, and taking a look at the big picture, we can see that the S&P 500 has recouped pretty much most of the ground that it lost in the major sell-off at the beginning of the year in January and February. The market has been in a classic example of an upward trend in recent months. Take a look at the price action since April. We can see the market has been creating a series of higher highs and higher lows over the last number of months. And in fact, yesterday the market went down to hit its highest level since late January, not too far away from the all-time high. Also, if you take a look at the MACD indicator, the MACD histogram, we can see that as the market was moving higher in the last couple of sessions, the momentum indicator swung from negative ever so slightly in the red to a positive territory now, and it's actually increasing as well. So as the market is pushing higher, we're seeing a steady increase in positive momentum. So the rate of change is heading in direction of the bulls and the buyers. So with this upward move, you can be more confident that this upward move is going to last, just because the rate of momentum is in favor of the bulls and the buyers. So if you do push on higher from here, we could be looking at retesting the January high and therefore the all-time high of 2,877. And then, of course, if we move beyond that, traders will be keeping an eye out for numbers like 2,880, 90, and then the big psychologically important number of 2,900. Obviously, this would be, if you were to see this would obviously be something indicated more medium to longer term. But in the near term, we could see the all-time high of 2,877 being retested. Now, the market's been in an upward trend for the last number of months, so we've seen markets bounce back after reaction low. So if we do see the S&P drift lower, we could see new buyers enter the fold and look for the market to continue the wider upward trend that it's been in. So if we do drift lower from these levels, support may come into play in around this area here at 2,825, or perhaps even down at the 2,800 level as a big psychological number. And then slightly below that, we did see the 2,791 area act as support recently, and also resistance not too long ago. This line here at 2,791 seems to be fairly significant, seeing as in early June it acted as resistance, and then in July and also throughout July on a number of occasions it acted as support. So while we hold above the 2,791 region, I suspect the outlook for the S&P could remain positive. Even if we drift below it, support might come into play at this blue line here, the 50-day moving average at 2,780. As you can see, there's a lot of consolidation in around that level in late June. And even if you drift lower further, support might come into be found at this yellow line here, the 100-day moving average, which comes into play at 2,726. Once again, notice how in June we did see a number of occasions the market, the 100-day moving average did manage to act as a support level. Now, if you are trading the S&P 500, it's worth keeping an eye on President Trump's Twitter handle, given that the trade standoff between the United States and Washington and Beijing is still ongoing. So any uncertainty around trade could hamper the S&P 500, and it's also worth pointing out that we could see increased volatility on Friday when US inflation figures are released. Well, that's all from me this week. Thank you very much.